Hello and welcome back to Stock Market Weekly. I am your host, Evan Medeiros, for Friday, June the 7th, 2024. Thanks for joining us. Thanks for being here. Summertime trading in full effect. I believe we had the lightest volume trading week of the year. Maybe we missed it by a little bit. I know we were on pace earlier in the day before I looked at the final numbers. Last week, if you recall, was a 4-day trading week as well. So I think we're on pace for it. We'll see if we get it. But the last 3 weeks, we've essentially come out with that same top line reading, slowest volume week of the year, and it just continues to, sort of dry up here. But there were things moving under the hood. We had jobs day on Friday here. So jobs numbers came in pretty strong or above market expectations. So this game of whack-a-mole really just continues here. Last week, if you recall, we had the PCE report come out, and yields dropped, with better than expected, or just, the timeline of Powell potentially cutting rates is all the market is looking at here. And so this game of whack-a-mole, every time we get a new print on either the economy or inflation, then, we get that quick short-term reaction. And quite frankly, I think it's going to continue until the Fed gets, backed into a corner, or we get into a sticky place where the certainty becomes clear. It seems like the market is still going to just pop and drop on these short-term numbers. So until next week, when I believe maybe it's CPI, I can't recall what report is next week, but something I think is around the corner, of course. Now, speaking of around the corner, Roaring Kitty is back. He posted his live stream, or hosted a live stream earlier today. 600,000 viewers on the live stream. I was one of them. I just got to ask, why don't we have 600,000 viewers? I think I've been at this a lot longer than him, and, don't quite have those numbers. So I don't know if I got to dress up in a animal costume and start pumping some small cap stock. I guess that's what it takes, but a very impressive turnout there. I don't think the stock reacted that favorable. We'll take a look at it later. Gold cratering this week, dollars moving up, yields moving up. NVIDIA's got a stock split. Let's get into the data here. This is the charting platform we're going to be using. What you see on your screen, this is TC2000. It's a charting platform that we support here at the Trade Risk. While summertime trading is slow, if you want to try out a new platform, we got a referral link in the description of this episode. I believe it still has a $20 or $25 coupon. Basically gets you a free month if you use our promo code. So check that out, and then check out the cool things we have on our website. Built for this platform, you can work with me on customizing it to your liking. All right, so let's get into the numbers here. You can see 1 week returns mixed, but mostly green here. So the Russell 2000, speaking of whack-a-mole, I believe this was the strongest last week, and now it's the weakest this week. We had technology, which was a week prior. Now it's the strongest. So we're getting this rotation kind of trading out pretty aggressively here in markets. But generally speaking, a positive week here for U.S. equity markets. You can see volatility also coming out of the market. So we got the VIX now back to 12.20. Very, very historically low reading here for the S&P Volatility Index. Now, taking it to the sectors here, top of the list is technology, followed by healthcare and communication services, up 1 to 2.5% this week. So a good showing there if you were in those particular areas of the market. On the downside, though, there were some things getting hit pretty hard. Utilities, energy, and materials. Now, if you recall from last week, we highlighted energy. Energy was the strongest last week. It was starting to actually break out of a decent looking consolidation pattern. Well, that was dead wrong. They did not get any follow through. In fact, it kind of fell all the way back and then some. So energy, that rotation trade, that move that we were starting to highlight there, certainly not taking place this week. It was one of the worst places to be. Now let's take a look here at our smart trend filter. So this is basically just smoothing out the noise, putting in a nice kind of clean red, green, or yellow, depending on the strength of the trend here on all the sectors. The daily time frame here, you can see energy right now back into the downswing here. We're starting to print up on these yellow days. We were looking for that transition up, and it did not happen. This is why, again, you can be courageous if you want to try and front run a signal and get in early, or you can wait for the confirmation. There's no right or wrong, right? You're going to pay either way. There's a cost, a pro and a con of both sides, but XLE continues to be in this down to bearish trend, which it has been in and has not printed a green dot since the beginning of April. Now, as far as everything else goes, we've got some mixed signals. We've got discretionary here, which is starting to turn up on Friday. That's nice to see. You're starting to see staples turn up here in the bottom right on Friday, and you also got biotech turning up earlier in the week. So there were a couple of things moving this week, but generally speaking, still kind of a mixed stock pickers market. Now, if we take a look here at market breadth, one of the things we always look at, 52-week highs, 52-week lows, what's the ratio look like, who's in control? And when we look down here at these ratios, you can see that the buyers are still in control. It's kind of weak. It's a little slow, and you are getting some more stocks hitting 52-week lows, but you're still kind of in the same sort of ratio here where things are kind of glass half full, but it's not that exciting, and it really is as technical as that. I mean, you know, we can overanalyze this and really compute to the second decimal point of momentum here and what this ratio is you know, sloping as. But for now, I mean, we're coming out of a good bull run here for the first half of this year. We're starting to weaken up now in summertime. Let's continue to monitor this and continue to see, you know, continue to wait and see for just a stronger signal one way or the other, either bullish or bearish. But let's get out of this kind of messy, you know, doldrum here that we find ourselves in. Now, Investors Business Daily, they are a sponsor of this show. Thank you, IBD, for sponsoring this show. This is their top 50 IBD 50 list, top 10 stocks. You can see pretty good returns here for the week. ARM Holdings moving to the top of the list here, up 13%. NVIDIA, of course, 10%, huge move. Was briefly the second most valuable company in the world. I believe it's number 3 now, or maybe it's still 2. It's close, but you can see it's neck and neck with Apple, I believe. Anyhow, you can get access to this list with a link in the description of this video, and updates every day, and you can start to see some of these big winners that IBD curates on their IBD 50 list. Now, moving over to commodities here, you can see natural gas just completely standing you know, away from the pack here. It usually does. I mean, this thing just trades in its own mind, and of course, it's got a lot of beta, so up 15%. Congrats to those who were following that. Bitcoin was up 2.26%. Certainly didn't feel like it. Friday, we lost some momentum in the old Bitcoin trade, but still for the IBIT up 2.26%. Ag was up, dollar was up, and everything else was down, including gold pretty sharply. A lot of the metals down pretty sharply this week. Last but not least here, before we get to the charts, we can look at treasury yields, and you can see this is the tough one on Friday. We got this spike back up here after the jobs number. So the TNX here was up after really rolling over and almost looking like this was the bull victory here, right? Where we finally were breaking back below trend. It looks like we were cascading lower, and then there it is again, a stubborn, sticky economic data point in this case to really kind of throw a little wrench in the super bull case there on easing anytime soon. So we shall see until the next economic report. Let's get into the charts here. S&P 500, it's a weekly time frame. Let's clean this up a little bit. You can see that this week, you know, while things were slow, messy, a little quiet, choppy, we still managed to grind up to new highs here. The S&P 500 finding some follow through. New weekly closing highs, 53.46, up 1.3%. If we go back to our other view here, you know, we were talking about this market as last Friday, basically, when you know, it put in this big reversal day. We talked about this intraday range last week, and we were looking to see, you know, if we could find some follow through, if we could stick that range, and you know, after kind of briefly falling back into this old range, you know, buyers stepped in aggressively, closed us back above it. Well, we got the answer. They held up, and buyers did step in and continue to support this market. We didn't fall back down. We didn't test Friday's lows. We grinded higher for the rest of the week. Most of the gains coming from Wednesday's trading session. And then Thursday and Friday, you can see just a little bit of a mixed reaction here, kind of failed to hold those highs. But again, you know, bigger picture now, you're in pretty good shape, right? S&P 500 really close to those all-time highs. Another higher low get put in, and life looks pretty good. Now, Nasdaq 100, pretty similar situation. Friday, we had that big tail, right? That big intraday reversal. I think it was like a little over 2% day of range on Friday. And you can see follow through support, or, at least digestion, boom. Wednesday was the big day, breakout to new fresh highs, and then we got more digestion and digestion. So we seem to be getting this, big move, and then it's consolidation, big move, consolidation. It's kind of following in that pattern. Again, summer trading, volume's low. I've said it a million times, continue to say it because I think it's just so important to understand the market dynamics that you have in front of you. Right now, things are slow and the major trends are continuing to work. So that's the Nasdaq Russell 2000 here in its own little universe now. So you can see more of a consolidation straight down. This doesn't surprise us. Again, we've been basically calling for the Russell 2000 to go absolutely nowhere for the foreseeable future between call it 190 and 210. I guess it depends on your time frame because that is somewhere. That's a big range. So it's not like we're making a big bold call here. That's a 10% range. So for swing trader or day trader, that's a lot of room to work with. But generally speaking here, no structural change. Got to wait for Russell to break out over 210. Still doesn't seem like that's happening anytime soon. So let's get to a few other charts and then we're going to call it a day. Gold, I think, is interesting. Gold, big move, 3.5% on Friday. Again, this was that knee-jerk reaction, dollar up, rates up, kind of the whole flip of where we see, future expectations of rates. And the gold is very sensitive to that, of course. It's down 3 weeks in a row. It is coming back into this prior kind of demand area, this May low. So I think this is an interesting spot for GLD. I still like metals. I still like GLD. I think it's something that is going to work in this environment, generally speaking, but it's coming back. It's in consolidation mode, and I think you got a shot to pay attention to it here in the low 210s. We do have some gold in our Galahad portfolio. So gold's been a nice winner this year. And right now the trend is still up. Silver, same thing, pulling back this week a little more aggressively. I mean, I don't have as strong conviction as silver, but gold I like a lot. Silver, just a different pattern, higher beta, slightly different look to it, but still something to pay attention to if you miss that impulse leg higher. Let's go to Bitcoin as well, because this is now kind of falling into this trade. So Bitcoin here on the left-hand side, you've got the spot commodity, let's call it, price, and then on the right hand side you've got the IBIT ETF, and you can see that it was kind of in this flag consolidation sideways to down pattern for a few months. It recently broke out of it in the middle of May, towards the end of May, and now you can see we're just kind of dancing and flirting with these recent highs here. I think this 71.4, which Bitcoin was testing on really Wednesday, Thursday, and Friday, is a very big level for it. It's not the all-time highs, but it might as well be, because if we start clearing and holding and getting a daily close over 71.4, it's pretty much a slam dunk into making new highs, because there's just pretty thin above it, and this level now has a nice strong band here around this 71.4. So I think that is your momentum unlock for Bitcoin. The chart still, to me, looks pretty strong. It's just had so much so much strength prior to this, a strong run up, nice consolidation developing here. I think you got to just shake folks out here. And until this narrative turns, until these inflows slow down or something else comes to really disrupt this, maybe it's, a strong recession or higher for longer, and just Bitcoin can't get that breakout. It's possible. Macro events hold this back. But for me, I still see all the fundamental catalysts driving this higher for the foreseeable future. Continue to maintain a position here. Our Galahad portfolio has been doing extremely well this year, and this has been a core position in it. So IBIT, I think you got to wait in the short term if you're looking for a Bitcoin breakout. I think, look, this could easily come back down to 66K and still flush and frustrate people as it builds out the right side of this base. But until it starts really moving back down to the sub low 60s, I think this trade is, maintains its integrity. So that's Bitcoin, that's gold, that's silver. Let's finish off with two stocks. We'll let you get about your weekend. GameStop. So GameStop here, Roaring Kitty live stream, right? I think a lot of folks were anticipating it. Also reported earnings. Company reported earnings here on Friday. So there was lots to move the stock, and move it did, down 40% on the day here Friday. Something you just normally see on every $15 billion market cap stock, right? Just a 40% casual move on a Friday summertime session. It's quite incredible. It's quite entertaining at this point. I think you have to be very careful here. I briefly, admittedly, went to the options chain just to see if there was some structured trade that I could, envision here for GameStop. But ultimately, I just kind of closed things down and said, this one is too hard, too confusing, too messy to touch. IV is through the roof. So, there's opportunity there, perhaps. There's also just a ton of risk. I think Roaring Kitty showed 120,000 calls that expire June 20th, $20 on the strike. So that's going to be quite interesting, and what kind of pressure that brings and how the market tries to maneuver that size position, because for GME, that's still pretty sizable. Certainly for an individual that is perhaps not so sophisticated and is going to be unloading that or moving that in a fast fashion. Is he going to try and exercise them? There's a lot of questions there. But for me, this is something that I am not going to be surprised either way. Honestly, if this goes down 80% or at 8x's over the next 3 months, I really wouldn't be surprised, because I think that's just the type of beast here, this feedback loop and all the capital and all of the market forces at work here. My suspicion is, I don't know. I wouldn't want to touch it either way. Okay, I'm just going to end it there. I'm not going to even give any other thoughts on that. GME, just be careful if you have it and manage your size, and take a look at options, because there's certainly a lot of selling opportunity if you're trying to limit risk, right? Not just naked sell any options or anything like that. That's a little too crazy. NVIDIA here. Let's finish off. This is another one, huge winner this week, 10% to new fresh highs. Again, 3 trillion market cap, briefly eclipsed Apple. It might be below it now, but stock split on Monday. So that's going to get probably just a lot of eyeballs. And look, this, depending on how you look at it, if you throw Bollinger Bands on here, throw weekly Bollinger Bands, this is above its weekly. Throw monthly on here, it's above its monthly. This is stretched. This is frothy. There's a lot of movement in here, but this is also the exact type of environment and seasonally where things can get quite silly and things can get more and more stretched. So congrats to those involved and that have been riding this trend higher. I have missed this one. I've been holding out on the Qs, which again, it's been working in my favor as NVIDIA grows in its market weight of that ETF. But I would say, with the split coming, again, I think retail's probably going to potentially just be frenzied all over it, because they suddenly see that NVIDIA is, it's only $120 a share now. Let's, this is much more. I can buy many more shares, right? And they think it's a better value. And of course, we know that really changes nothing underneath the hood, right? Market cap's the same. This number of shares just get changed. It's a little sleight of hand. And some people, though, of course, like it. And there are very little true changes of what makes that better, except for maybe position sizing easier in options is something, right? $1,200 option is expensive, or it can be. And if you need to maneuver one of them versus, 3 of them, 4 of them, 5 of them, right? There's some position size benefits you do gain on smaller stocks, but that's kind of it. You're buying the same discounted cash stream into the future. So with that said, we're going to end it there. We're going to let you enjoy the weekend. Thanks as always for tuning in to our weekly stock market update. We got links in the description of the show, including IBD's links and to our trading systems and to our TC2000 downloads. So check those out. If you're not on our newsletter, you got to jump on that newsletter, catch you up to date every weekend with a short email of everything going on. So that's it for me. Thanks as always. Have a great weekend. We'll see you back here next Friday.